welcome to Prime Property, your weekly real estate reckoner. I'm Nayantara Rai and this is what we have on the show today. SEBI's deadline for minimum 25% public float is looming large. Expect a slew of realty companies to tap the equity markets in a bid to raise almost $1 billion. Are the Bangalore and Pune real estate markets headed for trouble? Find out on our Price-O-Meter. Headed for divorce? Know your property rights. Senior advocate Pinky Anand gives her take and explains the ramifications of the proposed marriage bill on your inheritance and estate. SEBI's June 30th deadline is looming large for companies to meet the minimum 25% public float norm. So over the next few weeks, a slew of real estate companies and their promoters will tap the equity markets. These include, among others, DLF that will issue fresh equity of 8.1 crore shares and hopes to raise almost 2,000 crore rupees if you go by today's market price. JP Infotech will have to dilute 8.3%, which works out to be nearly 370 crore rupees. Puravankara has to dilute by almost 15% for around 300 crore rupees. Omax has to sell 14.14% and hopes to raise 370 crore rupees from that exercise. By October, promoters of the zero-leveraged Oberoi Realty will have to pay their stake by around 2.5%. It'll be interesting to see if institutional investors have such a big appetite for real estate, considering FIIs for some time now have been wary of the sector. And in the midst of all this, Godrej Properties has announced a rights issue of up to 700 crore rupees to meet its growth capital requirements. The company plans to launch the rights issue in the second quarter of this fiscal and will take a call on pricing at a later date. With a debt of under 1,500 crore rupees and a debt-equity ratio of 1:1, Godrej Properties says the rights issue is mainly to build upon its expansion plans. The realty firm is hoping to launch 15 to 20 projects this fiscal as against the 8 it had added to its portfolio in FY13. But with so many real estate issues hitting the street, how confident is Godrej Properties of its right issue being successful?
Well, clearly, I don't think we'd have proceeded unless we felt we were very confident we could get it done. At the same time, we've just announced this today. We are yet to engage with our investors. Also keep in mind that one of the reasons we've selected a rights issue is that we don't want to dilute the promoter stakeholding at all through this fundraising exercise. We think current valuations of the company are not at all attractive in terms of for us to dilute ourselves at these valuations. And with the promoter holding being 75%, 75% of the capital we raise from this rights issue is expected to be infused by the promoters themselves. So I think clearly we see a good opportunity to invest capital at these valuations. We see a good opportunity to grow the scale of the company and use these funds very productively. So I think we're reasonably confident of the success of the rights issue, but again, clearly that remains to be seen as we go out and have these discussions with our investors. Clearly, the reason from a strategic point of view to do it is that we feel we need more capital to fund our ongoing growth. We've seen great success in the market in terms of adding new projects. We've added about 10 new projects in the last 13 months or so. And we see good visibility on being able to sustain that performance going forward. And for that, we feel it makes sense to raise this capital. It will allow us to strengthen our balance sheet and give us the platform we need. Exactly how it will be apportioned is something we'll have to sort of clarify.
Companies and promoters have no choice but to pare their stake at a time the real estate market is still very much in recovery mode. Realty rating agency License4Us says the sector is still going through a lull. It's also predicting a slump in Pune and Bangalore. License4Us believes the undoing of these two cities has been the appreciation of prices to levels that are just not sustainable. Time now for our Price-O-Meter. The Mumbai market has been subdued now for nearly 2 years. There were faint signs of a sentiment turnaround when around Diwali time last year, we had seen a slew of launches at lower prices. But developers have again raised prices.
The sentiment hasn't really improved much. There was very marginal increase in the sales, it is then and there. Although in the previous quarter it was seen there was a bit of a corrections. and that was largely coming from the luxury segment new launch reductions which took place. But this quarter, the overall Mumbai metropolitan region's weighted average prices have further surged up. So the momentum of the price corrections has not really continued the way we were estimating. So market hasn't really shown any sign of recovery.
One would think everything one touches in the National Capital Region turns to gold. Prices in the NCR never stop appreciating. In many cases, they are up by over 100% since 2009. But then NCR is also very often called India's largest investor-driven market.
It's appreciating, that's one thing, but it's a completely investor-driven market, and that's basically when you go and see that, developers over there may be quoting X price, but in the same building the investors are today started offering 20-25% lesser prices to seek exit, and they are badly stuck. There is no answer because it's more bubble rather than actual fundamental driven, but nevertheless there is little productivity. Having said that, the market like Bhiwadi's or properties coming in the Rajnagar extensions or Noida extensions in the price bracket of 3,000 to 4,000 is still, and closer to the habitable locations, are still or can be considered for investments.
Bangalore has had a great run, but there may be trouble ahead given the kind of price surge we have been seeing. Exits may become tougher at today's prices, especially as the jobs market and the IT sector remains sluggish.
The way the prices have surged, like Habil has gone up as high as 50%. You have to look at Shajapur, and so on an average, if I look at on YOY level also, my Bangalore prices have gone up as high as 20-25%, which is city where the urban sprawl is moving farther. So city center of gravity of the price is also shifting. With that, if this kind of price increase is taking place, no market can sustain.
Hyderabad continues to suffer. Its infrastructure is great, but political instability continues to weigh in on sentiment.
The sales are not really improving. Last quarter we could see some of the new launches which are taking place and all, but this quarter those new launches were also subdued. But having said, for the investment point of view, I still see that that's a very interesting market.
Chennai, on the other hand, is having a pretty decent run and showing clear signs of recovery. And that's just not in the city center, but even in the outskirts.
Chennai has been doing quite good. So Chennai, if you look at the sales have improved, and so has the supply. And that's all because a lot of supply is in the peripheral areas and which are coming. And under a new CDP, the new nodes and the connectivity, the metro rails and other things is also bringing good amount of efficiency. So there are peripheral areas which are getting connected to the city, and in those regions we are seeing new supplies coming, and they are not very inconvenient location also.
And in the west, Lysis for us is sounding alarm bells for Pune's Realty market. It believes prices have gone up to levels that are just not sustainable.
The kind of a price rise which is taking place, it do suggest that market may not be able to hold those kind of prices. So going forward, I am saying that Pune is now becoming cautious. To Pune, if you look at east as well as west, both sides have its own economic activity. So the locations like Thatawade, Bhugaon, Wakad in the western sides are good. So the eastern sides we have got Wagholi, we have got Undri, we have got Kharadi and some of the other regions. So these are the locations which are quite close to the economic hubs.
We at Prime Property have been telling you about this new trend of branded residences. These ultra-luxury homes branded by global giants like Trump, Grand Hyatt and Four Seasons are also super expensive, beginning at almost around 20 crore rupees. This week on Launchpad, we tell you about yet another set of branded residences. But these homes are very modestly priced when compared to other branded residences. We're talking about Disney homes with a starting price tag of 35 lakh rupees. When you drive down the Delhi-Noida toll road, you see several of these hoardings. We know many people's initial reaction was, a Disney theme park is coming up in Noida. But there's no Magic Kingdom on the cards. Instead, Noida's local builder Supertech is collaborating with Disney for its latest project, Fable Castle. And also, since there's so many of these billboards at the toll road, you would expect the project to be somewhere nearby in the vicinity. Incorrect. It's 46 kilometers away from the toll and even beyond the F1 track. In fact, if you're coming from New Delhi, your cell phone will be on roaming at the Fable Castle. These Disney-inspired homes have been conceptualized on a 7.5-acre land parcel behind a 9-hole golf course adjoining those trees you see right at the back along the boundary. Fable Castle is actually part of Supertech's integrated township, Golf Country. We've already told you there's no theme park, but let's tell you about the Disney stuff that will be here. Disney-themed landscaping, car racing track, Princess Summer Palace, fountains, wishing wells, Winnie the Pooh play area, a Mickey Mouse clubhouse and an Avengers gymnasium. Here's the price list. There's also an option to convert any one-bedroom with Disney-inspired interiors. That will of course carry an extra charge and depends on what all you want in that room. On that note, we're going to slip into a short break. Coming up on the other side, Senior Advocate Pinky Anand explains the ramifications of the proposed marriage bill on your inherited property. Stay tuned.
Things are looking much better.
It's looking superb, sir.
Fashion has a new address. Clothing, footwear, watches and more. Now available on Flipkart.com, the online megastore.
Winds of change are blowing through global markets.
As commodities like oil and gold fall, will India be back in the radar?